Today's episode is brought to you by Mazars.
Sound Cartel.
Not to make anyone nervous or concerned, but just a reminder that as the tax office expands and becomes more sophisticated in their data collection, we should expect an increase in audits and reviews. From Sound Cartel, I'm Nicole Goodman, and this is Business Essentials Daily. In recent times, the Australian Tax Office has had its sights on private groups to ensure that they're meeting their tax, GST and superannuation obligations. It's been applying a trust approach during this process of reviewing private groups. So what does that mean exactly, and what do taxpayers need to do if approached for a review? For answers, we turn to Nathanael Lee, partner at Mazars, who explains what is meant by a private group.
In simple terms, a private group is an individual, or perhaps an individual and their spouse, if they have one, and their immediate family members, in particular their children. And then the group extends to all entities in which they have a significant ownership interest. So that's the type of groups that the ATO is focusing on. They've been running a number of programs over the last few years. They started with the top 500 private groups tax performance program, and as the name implies, it involved reviewing or auditing the top 500 private groups in Australia. And they based the rating on the size. And to give you an idea of some thresholds, if a group has over 350 million in turnover, then they would be caught, 500 million or more in net assets, regardless of the turnover, or with over 100 million in turnover and over 250 million in net assets. And that's on a grouped basis as well. Or other entities that they find are market leaders or groups of specific interest. What's flowed on from that then is the Next 5,000 program, which again, by definition, involves them reviewing the next 5,000 private groups in Australia. And to give you an idea of the threshold involved with that, it's groups with wealth of more than $50 million. And again, they look at the whole group of entities and all the connections therein. More recently too, we're seeing that there's a medium and emerging private group tax performance program, and that's pulled the thresholds right down to wealth of between 5 million and 50 million. So we can see a lot more people are going to be caught over time with these programs, or annual turnover of more than 10 million, which is not really that large in small business context. So we're seeing the ATOs very active in the private group area.
Absolutely. What's a typical ATO review process look like?
Well, you can rest assured that before the ATO makes contact with you, they've already done some homework on you. So before your accountant or your tax agent gets the phone call to say that you've been selected for a review, they would have no doubt had a look at your tax history. They would have done searches to identify what companies you're involved with, what entities you have, and even what property, assets, boats, vehicles that you may own, either in your own name or family members or connected entities. So they already know quite a bit about you. They've probably already identified certain areas they'd like to focus on as well. So we do find that they do a lot of homework. The first you'll hear of it is the ATO will normally call the tax agent or the accountant and just notify them. It's a friendly call. Your client's been selected for a review. This is the type of review we're going to be doing, and this is the process that we want to follow. They follow that up with a notification letter, which is a formal notification. And what the ATO normally likes to do is have an initial meeting involving the taxpayer and their accountant or tax agent, just to get a high-level understanding of the person's business. They really want to come and see you, eyeball you, and talk to you about your business. Anything that's happened in the last few years that's out of the ordinary, and they'll probably start talking about some certain topics that they want to focus on in that meeting as well. That then helps them to come up with a request for information, which is a formal request, requesting actual documents to be supplied. What we find is that's a really important part of the review. We really have to help our clients to make sure they're gathering all that information, making sure that it's complete, making sure that they're answering all the questions that the ATO has asked. That's really important. Also, too, in that process, there's the opportunity to make voluntary disclosures, which might be relevant as well. If mistakes are found, it's best to disclose them to the ATO up front. The ATO will review that, and they might come back with requests for further information, more questions that they want answers to. And at the end of the process, they'll either complete the review, and there might be some issues that they'll raise in a final meeting, some improvements they might want to see, or if they find significant issues, they can escalate it to an actual audit, which is spending a lot more time drilling down a lot more on those specific issues that they've identified. And as far as time frame goes, well, they can be in and out in as little as 4 months in our experience, which is a good result for the client. But when there are issues identified that could be in dispute, we've seen them go for 4 or even 5 years by the time it actually gets to the end of the process. So quite lengthy.
Yes. What areas of focus are you seeing in ATO reviews of private groups?
Yeah, there's just a few I'll mention. They like to understand the difference between accounting profit and taxable income. They are really interested in any new or significant transactions that have taken place in the period of review, normally the last couple of years. There's a big focus on trusts at the moment. The ATO has just published in the last couple of weeks new guidance around unpaid present entitlements, Division 7A, Section 100A. So anyone who has a trust in their group, you can expect that that's really going to come under scrutiny. And another thing that they are really focusing on now too is tax governance framework.
Can you take us through the ATO's view of what constitutes an effective tax governance framework?
Yeah, sure. The ATO has got guidance on this published on their website. And what we find from a practical point of view is most businesses have a tax governance framework in place. But the critical thing that the ATO wants to see is that that framework is actually documented. So it's in writing, and that it is regularly reviewed, and that there's evidence that it's being complied with. So for a company director to just say, oh, well, my bookkeeper looks after the BAS and my accountant does the tax returns and I just leave it to them, that's not what the ATO wants to see or hear. What they want to see is that company directors, owners of businesses have got a documented process to ensure that tax risks are identified whenever transactions are taking place, that there's clearly defined accountabilities, separation of duties throughout, so that the ultimate information that gets into the BAS or to the tax return is correct and tax issues have been identified. They want to see too that advice is being sought regularly, that thresholds are implemented in writing. If something's more than this threshold, we will go and seek formal advice from either tax agent, accountant or lawyer. They want to see that you're lodging things on time, you're paying on time, that you have a good working relationship with the tax office and that you're an ethical business person. And they want to see all that documented in writing and regularly reviewed and complied with. So it's quite a lot of work to actually get that process in place.
And what can a taxpayer prepare for a review?
What I'd recommend is you really need to have competent advisors and you need to have documented advice. For anything you're doing that's out of the ordinary, you want that advice to be documented. You really want to focus on trusts. Again, I mentioned trusts before, but that's a real focus area for the ATO. The law is complicated and oftentimes people have trusts but they don't fully understand how they work. You want to take into account ATO guidance as it's published, keep up to date with that. And as you can imagine, if these reviews go on for months or even years, there can be a very significant cost involved. So clients who have tax probe insurance can really help to soften the blow of the costs of this. And I think too, the other message is that if you are above those relevant thresholds that I mentioned at the outset, then you can expect to be reviewed or audited at some point. So prepare now.
Well, finally, Nathanael, where do you see the future of tax compliance going?
Well, I think we're going to see that the ATO is becoming more and more aggressive with reinterpreting old law. We're seeing that with the recent rulings on Section 100A and also Division 7A. We're seeing too that the ATO is using a lot of electronic information gathering, single touch payroll, foreign resident capital gains withholding regime, the GST withholding regime, third party data collection. So the ATO is building a picture of taxpayers from all these sources. And ultimately, the ATO has grown in size over the last few years. I expect they'll continue to do so, and we'll see more audits and reviews over time.
That was Nathanael Lee, partner at Mazars. This episode of Business Essentials Daily is produced by the team at Sound Cartel. Thanks for listening. I'm Nicole Goodman. We'll bring you more Be Daily tomorrow. Follow at BE Daily Podcast across social media and head to bedaily.com.au for more from the Business Essentials Daily podcast.
Sound Cartel.
This episode was brought to you by Mazars. To find out more, visit mazars.com.au. That's mazars.com.au.